Howdy. Welcome back to Dion Talk. This is probably just going to be a nice, super short live stream. I kind of wanted to take a few minutes and cover everybody freaking out about Zillow selling off 7,000 units. And in a lot of the Facebook groups that I'm in, people are saying, is the Zillow sell-off going to create another housing market crash? Is this an indicator of another housing market crash? To have a balanced market, to where it's not a buyer's market or a seller's market, we need about 3 million homes on the market. Right now, it's hovering between 1.1 to 1.3. It keeps going up and down. We're nowhere near a balanced market. So right now, it is strong to the seller's side. 7,000 properties added to 1.2 or 1.3 million is not going to make a big impact. Locally, like in Phoenix, where they're trying to sell 250 houses, you might see a bit of a surge in inventory, but that's not going to cause a massive crash across the board. It's not even really going to cause a big problem for Zillow itself, because everybody says, well, with this news of Zillow getting out of the flipping business and selling off these properties, the Zillow stock dropped, was it like 9%, which is still 13% above where it was last month when it was at its all-time low. So the business is making some changes, and they picked a strategy that didn't work for them. This is not in any way going to cause a crash. This is not in any way probably even going to cause any kind of a correction, except for in some, they're really selling these in 3 different locations. So in those locations, you might see some buying opportunities. But 7,000 houses are going to go pretty quick. Got my short Zillow rant out of the way. I'm back in buyer mode right now, so I'm looking for the next property. And my process is probably the same as most other people's processes when it comes to buying property. So I'm going to break that down really quick from start to finish. I have 3 agents with auto searches set up. So I can give basically the same cookie cutter criteria to each agent and let them set up their searches. And it's really weird. I've been doing this for over 10 years. And even though the agents have the exact same search criteria, I've only one time in 10 years have those agents sent me the same properties. So somehow when people search on the MLS, it's nuanced and they do it different, to where I've decided that if I was even a real estate agent, I would still have 3 other agents with auto searches set up. So those searches will come in. I know my area. I know the area average rents. I know the neighborhoods I want to stay out of. If you invest in or near Tacoma and you see the street McNeeley, you know just not to invest there. And so I can look at a property in a few seconds and realize if the math works based on what I know the rents to be. I use the CDS rental calculator app made by Chandler David Smith, who was actually on the BiggerPockets podcast this week that was released. Great information from that guy. I'm probably going to listen to that episode a few times. So my auto searches come in. I look at the properties to make sure the math works. If the math works and I know the area and I know it's an area I would invest in, I get a hold of my agent, whoever sent me that specific property. And depending on how good it is, like 2 days ago, I found one that was so good, my poor agent got a text, then an email, then a phone call, because I wanted the offer to be made within 10 or 20 minutes. So I contact the lender, who has me pre-approved to an amount I know that I can borrow up to, and submit the offer. The lender sends in a letter that says, you know, it's pre-approval for the amount that I make the offer. Even if I'm able to borrow more than that, I set that amount at the purchase price of the property. I also have the letter include a statement saying that we've done several deals together and Dion is a good closer, so that the seller knows that my lender has confidence in my ability to close. Send the offer in, and then I pretty much stop thinking about it. I start looking at other properties. If an offer is accepted or if a counter comes back from that agent, then I'll look at this property again. Once an offer is accepted, that's when I do the work to figure out if I want the property or not. A Google Earth view to look at the building, maybe a drive-by, maybe schedule a walkthrough. I have a 10-day inspection period, and in super competitive markets, you might shorten that to 5 days, but I like to keep it 10 days. Right now, shorter inspection periods aren't as attractive to sellers because almost everybody who's selling, their agents are going to tell them, we're going to be weeks out for an appraisal anyways, so a shorter inspection period doesn't speed anything up. During the inspection period, that's where I make the decision to buy the property or not. So I will look at all of the other things. And I have my search criteria that's in my search too. You know, like I prefer side-by-side units. so that tenants aren't above or below another. I want washer and dryer hookups in the unit so that tenants who are waiting for a property to open because they don't want to use a laundromat and they don't want to use shared laundry. I like at least 2 bedrooms with a garage because more space equals more stuff, so less likely to move. So once all my criteria is met, then I will move forward. The chronology continues with having the inspection done. If I can, right now it's pretty easy. I get the inspection done before the appraisal. Last year, appraisals were done faster because it wasn't as competitive and it wasn't as busy as now. And if I can get the inspection done first, if there's enough problems with the inspection, I know I can back out of the deal without also paying for the appraisal because the buyer pays for both of those. Then once the inspection goes through, I will take points from the inspection report and send a message to the seller or the listing agent through my agent, talking about any price adjustments or repairs that I want done. My friend who's buying a duplex, it was at 565. She had it listed, the offer accepted for. There was enough issues, not much, probably less than $1,000 or $1,500 worth of repairs to do, but presented in such scary language from the inspection report that we submitted that to the seller and they took $10,000 off the price because they didn't want to fix the problems. They would just adjust the price and then she would, as the buyer, take care of those problems. And it was nothing major. Once that's done, you kind of sit back and you wait for the appraisal. And it's the weirdest time because you sit back and you think, I hope that educated person whose trade is to estimate the value of properties says my property is expensive enough for me to buy it. It's one of the weirdest times where we sit back and we're hoping for something we're going to buy to cost enough for us to buy it because the lender will only lend if it appraises at a high enough value. My goal is usually that the appraisal comes in $5,000, $10,000, or $15,000 under the accepted price, because this is the second time when you can try to negotiate the price with the seller. This has worked for me once before. But the seller also let me know that they were in the middle of a 1031 exchange and they had already had an accepted offer that fell through. So I was the second position. I've gotten 3 of my properties being in second position. So I knew that their timeline on their 1031 was pretty close to the end. So I had strong negotiating power. Once the appraisal's done, everything goes to title, and Matt, the lumberjack landlord, has done many more than me, so he can clear this up in our next session. But title has time frame for making sure utilities are taken care of, getting the math on prorated rents and how long they need to record things. And so then you kind of go into another waiting period before you get your closing date. And closing date is when you're going to sign about a stack of this many papers, traveling notary if possible, or you have to go to their office. Every time I've worked with title, they've told me that they want me to wire the money, but my over 30 shows, and I don't like to wire money because it's too easy to be scammed at just the right time. You'll start getting emails that look very official with the wire instructions. I go and get a cashier's check with you. If you have enough, if you keep more than enough money in your bank account and have the right kind of account, cashier's checks are free. And then I take it to the title company before closing or before the closing documents.